Good evening, everyone, and welcome to a special episode of Mormonism Live. I'm Radio Free Mormon. Today's date is June 9th, 2025, and we are breaking a news story that started yesterday with the drop of a very significant report from the Widow's Mite report. Now, this is 82 pages, which is much longer than prior reports have been from the Widow's Mite, but it's extremely important. It's extremely significant. It's not the same old stuff you've heard about, nor is it the same kind of stuff you've heard about. This may actually end up in the area of tax evasion by the LDS Church. To help us understand the Widow's Mite report and the ins and outs, we have Professor Spencer Anderson with us, and he'll be joining us tonight on Mormonism Live. These are exciting times, aren't they, Mr. Real? How are you doing?
I'm doing great, RFM. Yes, this is exciting. This hit yesterday. We knew about this for a little minute, and here's a great opportunity, I think, for folks to see the work that the Widow's Mite report does, and I think it is so important what they do.
Yes, what we've seen it for a day and then a few hours since it came out on Sunday morning. It dropped, and in that time, we've been able to contact Professor Spencer Anderson from Indiana University, professor of accounting there, and have him, and also a member of the Widow's Mite group. So if we can bring Spencer Anderson on, there he is. How are you doing?
Hey, everybody. Good. How are you? Thanks for having me.
Good to see you. Thank you so much for making time. I know that your schedule is very busy. We first tried to get you on Wednesday night on the regular show, then Tuesday, and that wouldn't work either. And then, so now it's Monday before our newscast. Thanks so much for being here.
Yeah, you bet. Thanks for having me.
Have you seen this Widow's Mite report?
Sorry.
Have you seen this Widow's Mite report?
Yes, I have.
Did you have something to do with it?
Yeah. So, I mean, usually, I've kind of been on behind the scenes a little bit, kind of serving sort of an audit role, but this time I was able to contribute a little bit more to this report. So maybe a little bit more involved in the past. Yeah, it's been a huge undertaking for sure.
How long has this been in the works?
It's probably been over a year in the making, is what I would say. So, and I haven't been involved for the whole time for that, for sure. And other people have been more involved than I have, but, yeah, it's been a lot of analysis, a lot of back and forth, huge efforts by some tax and accounting experts. And just the fact that it's a tax issue makes it so that you really need some specialists that are wading in that complexity. So yeah, it's been a huge undertaking.
Yeah, and to be clear, I know we're going to have to talk a little bit about the 13F fiasco and all the dummy shell companies that the church had that they got in trouble with the SEC for. But it's important to stress that really that did not have to do with tax implications and the IRS. It was just misreporting of what entities had what assets. Is that fair to say?
Yeah. Yep. That's part of it. That's definitely kind of in the backdrop of this. And I'll kind of assume that maybe people kind of already understand some of what was going on with that, just because, we spent whole episodes.
I know. Can you give it to us in 3 minutes?
In the 13F thing?
Yes.
Okay. Yeah. So the church is required, well, any investor that has more than a certain amount, 100 million of assets in securities that are called 13F securities, meaning that they're publicly traded securities in the US. If they have more than that, then every quarter they have to file a form with the SEC that gets publicly disclosed to the rest of the world. And in that form, they have to say, these are the amounts that we have in this company, and this company, and this company. They basically have to divulge their whole portfolio.
And these are for United States stocks.
United States. Yes, it's an SEC form. So it's all based on SEC regulation in the US. And the church didn't want everybody to know how much money and how much wealth it had and how much was in that portfolio of securities. And so it created fake shell companies that were named in sort of ambiguous terms that could not be tied back to the church.
Like
And
Argyle.
therefore, like Argyle, Whitney, other
Yes.
names like that. Yes. And they even had names in other states, and they were signed by people that had ambiguous names that worked for Ensign Peak, all in an effort so that people, when they saw those reports or they saw that Argyle had a bunch of money, they didn't ever tie it back to the church. And this scheme became more and more complex as time went on. The number of shell companies grew over time. Eventually, there was a whistleblower that worked for Ensign Peak that came out and basically blew up the whole thing. The SEC engaged in an investigation, and in 2023, the SEC came out with the conclusion of their investigation being that they had broken the law, securities reporting law. And so in the backdrop of all this is that for the longest time, for between 2002 to 2022 even, we didn't really know what securities, I guess it was 2020. We didn't know like what wealth the church had. We didn't know what securities they were invested in. We didn't know if they were invested in Coca-Cola or any whatever companies and how much was in there. And some of the decisions that the church made during that time when nobody knew is involved here in this story here. So you have to kind of think about the fact that the things that they were doing were under the guise of operating where we wouldn't be able to see some of the stuff that we're able to see now.
And that's the way they wanted it.
And that's the way they wanted it. And it kind of explains their behavior. But we have to kind of think in that mindset that a lot of this was hidden and it's no longer hidden. And that's maybe why we're able to put together the pieces of the puzzle today.
I'm going to ask you a general question here, which is this. We understand that the church has Ensign Peak administrator's account, right? And that has an awful lot of money in it, in investments. And around, what is it, around 50 billion now in the US stock market?
Yeah. And but in addition to that, we estimate around 200 billion in for-profit investment assets.
Yes. And I'm focusing on the US stock market because that's what we're talking about here. And that's what these reports have to deal with.
Yeah.
So they have around 50 billion or so now. But my understanding was that the church is a nonprofit corporation. And so it doesn't have to pay taxes on income it gets through its investments in the US stock market. Is that correct?
That's right. So this is an odd thing that I think a lot of people might have trouble understanding why this would be the case. But if you're a nonprofit, either a church or a charity organization, let's say that you invest money in Coca-Cola stock. If it's me that invests in Coca-Cola and Coca-Cola gives me a dividend for my investment, or I sell it later at a higher price, I have to pay taxes on that. I have to pay capital gains taxes. I have to pay dividend taxes. These types of taxes, the church never has to pay. Ensign Peak does not have to pay. That's not what we're talking about with this report, because that would be called tax avoidance. And there are certain strategies, like you can set up a nonprofit organization that then allows you to avoid taxes, but it's all within the law. And instead, we found an area where the church seems to have engaged in tax evasion, which means it was illegally avoiding taxes.
Is there certain income that the church made with its investments that it was required to tax on?
Yeah. So there's something called unrelated business taxable income, UBTI. And this UBTI essentially means that you're earning money in a certain way that is deemed still taxable, even if you're a tax exempt organization. Usually it's related to the fact that when they call it unrelated business taxable income, it's because it's unrelated to the nonprofit purpose. Some people could argue that, some of these other things I talked about, like investing in Coca-Cola, are not really along the lines of the purpose of a charitable organization, but that's a legal loophole, I guess, is what you could call it for taxes. Yeah.
No matter what we might think, if it's a regular stock in a regular company and the church is a nonprofit, which it is, and it's not required to pay taxes on it.
That's right.
Yeah. I'll just note, just a little side note, as a nonprofit, I saw before the show started that one of the things that was mentioned was a 990T. We've had to do that with YouTube ad revenue or any bit of merchandise that we sell. It's not under the umbrella of being the tax exempt part. And so every entity that's nonprofit or tax exempt still has ways, and like you say, that wherein they can make money, but which they have to pay taxes on it. And we do that just like everybody else.
Yeah. Yeah. I think if you earn more than 1,000 or something in UBTI, you gotta file it.
So there are different ways of legally creating companies. One that's very common is to incorporate, but another is instead of having a corporation, it's to have a partnership. Does that make any difference tax-wise?
Yeah, I'll clarify a little bit of what you said, because you can actually structure yourself sort of as a corporation, but then and then be taxed as a partnership too. So I don't want to get into too much detail there, but you can you can be taxed as an S corp even though you're an LLC. There are lots of different ways to kind of structure yourself. But yes, the way that taxes work for a partnership is different than an ordinary corporation. And so in this case, what we're looking at, and by the way, I don't know if I've talked about this, but like, I feel like this is the biggest, most important analysis that the Widows Mite report has made to date. Just the fact that it's sort of new information, and the fact that it challenges the preconceived notions that we've seen before that were made by other people already is really kind of where it makes its contribution here. And so I want to kind of make sure that it's clear that I think the goal here is to try and simplify it as much as possible for you, because it is very, very complex. The fact that we went through this and it's 82 pages long. But sorry, I forget your question, RF. I'm sorry. What did you say?
I think it's great the way you answered it. It was totally non-responsive, but a much better answer than my question. So I want to ask you, though, follow up on that. For this year or so that it's been going on, this investigation by the Widows Mite people, has this been really hush-hush?
Among the Widows Mite team?
Yeah.
Yeah, absolutely. I mean,
I didn't hear about it,
right? You didn't know about it, did you, RFM?
No. And if I had known about it, there wouldn't have been this minor grammatical error.
Oh, no. Where was
it?
Two
B's in a row in a sentence. But that's okay. Everything else is really, really important. I shifted on to the powers that be after I saw it this morning.
No, I think people that might usually be on the team weren't even privy to it in this case. And so it was very, very hush-hush.
And is that a reflection of how important it is perceived to be by the Widows Mite team?
Yeah, I mean, honestly, like, you think about like you don't want to release something that's of this sort of tenor and this sort of magnitude without it being backed up by strong evidence. And so much care and attention was made throughout to try and make sure that we had our bases covered. We tried to think of different explanations for what we were seeing, engaged with tax experts, different accounting experts as well. And so, yes, to answer your question, yes. Yeah.
Well, I'm glad we can talk about it now. I'll underscore what you said before, which is that we're hitting the bare bones of this, so people can get the basic gist of what's going on.
Yeah.
And in order to do that, you had picked out a handful of slides from the 82 and the Widows Mite report, which everybody can access, by the way, at let me just double check.
The widowsmite.org.
thewidowsmite.org. Thank you.
And they're also, it's on Instagram and Facebook too. So you could find their report that way too.
Okay. And we've got a link that Bill just put up. Thank you so much for that, Bill. All right. Now you tell me whenever you want me to put a slide up. We were just talking about the difference between corporations and partnerships and the way investors in those institutions are required under the law to pay taxes, even if they're not for profit.
Yeah, maybe we could go to the summary first, like page 1, and just talk a little bit about the takeaways of what we found, and then I can get into like what a partnership tax and how it works, and kind of dive deeper into it. But basically, the analysis, our takeaways from this, is that we found strong evidence that points to the church engaging in likely tax evasion between 2003 and 2017 in a very systematic way. In 2018. So right after that, the church's tax behavior suddenly shifted enormously and appears to act as though, compliant from that point on. So starting in 2018, suddenly they appeared with these certain types of securities to be tax compliant.
Did that
And
coincide with anything else?
yeah, so 2018 is an interesting year for the church to start being compliant because it coincides with the time that Ensign Peak's portfolio was particularly susceptible to potential scrutiny. So in 2018 is when the Mormon leaks event occurred. And then David Nielsen, the whistleblower, he resigned in, I believe it was August of 2019. Now, they don't file the 2018 report until 2019. And so it wasn't until a few months after David Nielsen resigned that then they had to file the 2018 filing. And so it seems as though it's after the whistleblower resigns, in sort of probably not too happy fashion and causing potential scrutiny. And then also the fact that Mormon leaks happened just the year before that they suddenly about faced and started acting as though they were compliant. And we estimate in this report through various estimates different models that we used, that in this one lone instance, so just with the PTPs, which we'll talk about what those are in a moment, but just this one specific small subset of investments, over the years, the church underreported between $200 to $450 million in taxable income. And what that means is that they likely underpaid in taxes roughly 40 to 90 million in taxes.
And that's approximately 20% of the amount they didn't report. Is that correct?
Right. Yeah. Another key fact here is that Deloitte, and I don't know how much people know about accounting or whatever, but
I know
Deloitte,
nothing about it. So please tell us what Deloitte is.
Okay, Deloitte is a big four accounting firm. So it's one of the largest four accounting firms in the world.
When you say
Um,
big four, what does that mean?
They usually call it the big four. So if you work for a big four company, it's usually one of the biggest four accounting firms. And Deloitte is one of them. So you might have heard of Ernst & Young or PwC. No? Okay.
Not a one.
That's
No.
KPMG. All right. So Deloitte is one of the four biggest accounting firms. It's a global accounting firm. And it was the one that was helping the church file its tax filings to the IRS. And so it's unlikely, in my mind, that collusion was going on where Deloitte was also in on this.
Mm-hmm.
But I suppose that's possible. But if not, it means that the evidence suggests that the church lied to its accounting tax provider by providing some form of redacted or incomplete picture of its economic activity to Deloitte, right? And then through that, they were able to kind of file the wrong tax forms, essentially.
Mm-hmm. So Deloitte ginned them up, and then whoever was in authority in the church had to at least countersign it, right?
Sure. Yes, absolutely. Yeah. And it's also important to kind of acknowledge that like these are very niche securities. So if the church did have issue with like not understanding this, which we could get into in a minute, that we don't think is the case, Deloitte is hired to help in that respect, right? And so they would have known the right way to do it. So you can't really claim ignorance here or bad legal advice.
Mm-hmm.
There is a right way to claim income.
And one might wonder even this, if the church as an entity doesn't know it's a problem, okay, and we'll get to what the problem here is in a second. Why does it look like the church is withholding specifically that information that is the problem from their accountant if they don't know it's a problem in the first place?
Yeah. Well, we don't have evidence that they hid it from Deloitte, but we have evidence that they hid it from the IRS and from the public, which
Yes.
you can infer that there was probably some hiding to Deloitte. Yes, as well. So the other thing I'd say too is that, like I said before, this is just a subset of the investments that we can see. The only reason we were able to see this is because they happen to have public filings that are related to PTPs. So it's a very, very small subset of the estimated portfolio of Ensign Peak. And this would be, I think at best, only 1% of the total portfolio of Ensign Peak in terms of size. So when we talk about 40 to 90 million of unpaid taxes, there could be a lot of other investments that the church could have evaded taxes with, and we simply just cannot speak to those because we don't have the data. So we're not going to make any claims about that, but it does make you wonder if these are the ones that are the more public ones and they were willing to engage in this type of risk, then there could be a lot of other partnership income and other things like that could potentially be also the same thing going on.
Yeah. Right now, this is the equivalent of a crime scene, and you're the detectives coming in, trying to pick up clues and piece together what it is that happened. And what you're saying is a lot of other bad stuff could have happened that we can't tell from the clues that are available to us. So it would be great if the IRS came in and made the church give up all the facts so they could see what they've really been up to.
That would be fantastic. That would be great. Yeah.
But as for
just
today,
in terms of rule of law. Yeah.
But as for today, we're going to see what the Widow's Mite has put together that the church has been up to based upon the evidence at hand. I'm sorry, Bill.
Yeah, you asked a question, RFM, and Spencer was worried about the way it was worded, so he addressed correcting that. But I think the question is still unanswered, which is, whatever happened, let's just assume for a moment that there's intention behind it. It's just not some goof accident. If there's intention behind it, what would be, is it beyond just hiding 40 to 70 million, whatever it is, that is peanuts for them in the amount that they have. Is there any other benefit of obfuscating that information? Is there some other part of what's going on here, like the SEC stuff with the 13F filings? Would keeping this kind of information away from the tax preparers give you a little more cover for the 13F companies, for instance?
Yeah, I hear what you're saying. Like, it's like part of like a larger strategy.
Yeah.
Where you have dual purpose. And I think that we see a lot of that, right? Where it goes both ways. So some of the fact that like you had the 13F securities and you created these shell companies, it looks as though it's possible that part of the reason that they created the shell companies in the way that they did and in the timing that they did was in part to either separate out sort of like the public nature and the susceptibility to being found out of common stock holdings versus PTP holdings in some cases. And the way that they structured the shell companies might have also been to help them evade taxes. But also the way that they reported in their 990Ts, although the way that you're doing it is possibly to avoid taxes, and it's kind of risky to do that anyway. The fact that you're not reporting as much income maybe helps with the purpose of hiding the size of the portfolio, right? So if they actually did report, it maybe more directly to your point, Bill, maybe if they actually did report $500 million in income, the taxable income, people would have said, wow, the church has a lot of money. And that was sort of the purpose of the shell companies in the first place. So that was maybe that's part of the reason that they did it. It's so hard to assign intent, right? Yeah.
Right. So let's go ahead. Tell us about these PTPs. Are these the specific companies that if you invest in as a nonprofit, you got to report it to the IRS and pay taxes on it?
Yes. PTPs are called publicly traded partnerships. So, I think that maybe why this is important to think about, like we said, Enzyme Peak, they're tax exempt entities. That doesn't mean that they're exempt from all taxes. One of those things that they have to pay taxes on is PTPs, and they're public companies, so you can buy basically stock in them. They're just not in the S&P 500, but you can buy shares in them. I would highly recommend that nobody listening invest in PTPs, because then you end up with a tax issue on your hands, and it's just not worth it. But they're usually in the natural resource space. They have certain requirements in order to be classified as a PTP. But they're tax-like partnerships. That's the biggest difference. And we'll talk about in a minute what that means. But just to give you an idea of like how rare these are, there are only about 50 in the US market today. So when we were talking as a team in, the Widow's Mite, there were people on the team that have a lot of expertise in finance or investment or tax. And they don't often run into these, or in some cases haven't even heard of them after working for decades. It's just something that you just don't run into because there are only 50 of them, right? And um, so they're niche investments. They're very specialized. And the way that PTP taxes work is that most public companies, they'll pay income taxes directly to the IRS. So Coca-Cola, when they earn income that's taxable, they pay the money to the IRS that they owe. PTPs work like partnerships. So instead, they give distributions to the investors, in this case, the church, and then the investors are given a tax form that gives them the information that they need to figure out their taxable income for the year, and they pay the taxes that have passed through the PTP to them. And so it was the church's responsibility to pay the income taxes that were owed based on the income that the PTP had earned. Did I say that okay?
I think
just want to
so.
make
And the
sure.
form
Okay.
that is sort of, is it like a W-2 form from an employer?
It's called a K1, and
It's called a K1. I was
it's
just
a
trying to liken it to something that maybe the audience
yeah,
has more
yeah.
familiarity with. You get
Yeah,
a
like, okay,
W-2
this is
form
how
from your
much you've earned,
employer.
and yeah, and here's your deductions, and yes, a lot
Right.
like that. Um, the other thing that's unique about these PTPs is that so money keeps coming in every year, right? So you've got your investment, and they give you like a dividend, basically. And if the PTP is doing well, you get a distribution. That distribution doesn't generally get taxed until the PTP investor actually sells their stake in the
Right.
PTP. So that's a really key point here.
Mhm.
So the church would be getting money every year from these PTPs, and they don't have to pay taxes on them generally. I'm summarizing this, I'm watering this down for the audience. But for the most part, they don't have to pay taxes on this income until they sell their stake in the PTP. And at that point, calculations have to be made, and the investor has to pay taxes that have accrued up during the time that they own the PTP.
And naturally, the longer that you've held a PTP and the more it has accumulated, the greater your tax burden is going to be when you do sell it.
That's right. And that's why sort of the number one rule for PTPs is don't sell them. Because the longer you hold on to them, the more you can hold on to that tax advantage. It won't last forever, but as long as you hold on to them as long as you can, then you can sort of delay the amount of taxes that you have to pay. But eventually, it's going to come due, and obviously, you trigger that moment when you decide to sell.
Mm-hmm.
And so, yeah, like you said, the longer you've held a PTP, the more you're going to be paying because you've accumulated a bunch of taxable income. And so that's kind of the backdrop. So yeah, so I don't know if we could go to page 9.
We
Are
will.
we
And have we
close there?
talked completely about how the PTP taxes work? I sort of think we have. Was there anything else you wanted to add to that or any questions that you had, Bill?
No, I don't have anything else at this point.
If there's anybody who like wants more detail about that, we attach some appendices to the report, and Appendix 4 is where we really get into the weeds to
Yes.
describe where our model was. We estimate all of the deductions that were made, the depreciation adjustments, and things like that, to estimate the taxable income for the church. Yeah.
Thank you. And that's quite lengthy and very detailed.
Yeah.
So, point number 1, now that you've explained the basic ground rules of PTPs and how they operate vis-a-vis nonprofits like the church, first question is, how do we know that the church actually invested in PTPs, in these partnerships?
All right. So this is where it kind of gets cool, I think. Like we were talking about the 13Fs and the shell companies. Well, it just so happens that PTPs, because they're public corporations, essentially, they are 13F securities. So that means that the church had to, in their 13F filings, also list what they had invested in these PTPs, not just Coca-Cola and these other, shares. So at the time, probably not a problem for the church because Ensign Peak wasn't filing a 13F under Ensign Peak. They were filing it under one or more shell companies. Well, now we can look back and we can see every year, every quarter, how much did the church have in PTPs and in which PTPs and how much and when did they sell them? And this is what we find is that it owned a lot in PTPs, a really odd thing for a nonprofit company to do because you end up having to pay taxes here. So what are you doing? Why would a tax exempt company organization be doing this? We can talk about
Spencer,
that
I've got
maybe.
to ask you this question that occurred to me when I was reading the report. Is it correct that these partnerships, I would think they'd have to give a substantial dividend or payout or money given to you in order to make it worthwhile compared to a regular corporate kind of stock investment?
Yeah. Yeah, they don't always. But in this case, it looked as though like if you looked at like the slice of their portfolio that was PTPs, they did really well with these PTPs. So it makes sense that the church was investing in them because they were getting extra returns on top of what they would be investing in with, or what they would be getting in returns from investing in the S&P 500. And that's even considering the taxation issue.
Right. I was going to say, and
So
that's even before their position's even better with these when they don't pay taxes on them as required by law.
that's right. Yeah. So they did really well with these PTP investments. Is it worth the hassle for any like general, like normal person like you or I to invest in PTPs? I would say almost definitely not,
Mm-mm.
because of what I've heard is that, individuals that will accidentally invest in a PTP in their retirement account or something like that. And then every year their tax accountant comes to do their taxes and they have to, basically they charge the person more to do their taxes on these stupid PTPs than they earned in their return. And
Oh,
so if you own a lot and you're doing sort of it all on your own, then maybe it's okay. But for you or I, just not worth it.
well, Enterprise Products Partners is the name of the PTP that the Widow's Mite has identified as the church holding the most of. Is that correct?
Yeah, yeah. At least at peak size. And so what's crazy about this is so they were like a top 20 in. So you look at the list, like these are some of the PTPs. These are the names of them. You can see that a lot of them are energy or natural resource companies. That's a very, very common thing with PTPs. Almost all of them are natural resource companies.
Oil and gas.
Oil and gas. Yep. And so if we go to page 63, which is in the report,
Okay.
you can see like this is a poll from Bloomberg, but this was like basically the top 10 owners of these PTPs. I think it's Q3 2010 or something like that, for these different partnerships. And so, for example, that first one right there is KMP. And you can see that Argyle Research LLC was the fourth largest holder of that company.
Oh, yeah, I see it.
BPL, Argyle Research LLC, TCP Pipelines, Argyle Research LLC. Look at the names around Argyle. You've got Bank of America, Goldman Sachs, State of California, Morgan Stanley. And so it's really, when you think about this, like the church was really engaging in a potentially risky endeavor here with only one shell company, where people could, think about like how small this group is. PTPs are already a very rare, weird
Mhm.
kind of animal. And here they're looking at like the top 10 investors and they all know each other, except who is this Argyle?
Who's
What's going on here?
Argyle?
Who's Argyle? And so you could see that if anybody wanted to do some digging, the problem would be that it could potentially lead to the church, right?
Right.
So that's what led, and in large part, that's what we think led to the church selling some of these PTPs. Now, that causes a problem, right? Because we already talked about the fact that you don't sell PTPs. If you sell PTPs,
You got to pay
you're
the
going to have a
taxes.
huge taxable income that you've got to report. And so the church found itself between a rock and a hard place,
Hmm.
especially like around 2010, 2012, where they were trying to hide everything. They had created shell companies so that nobody knew who they were, but they had invested so much and had engorged themselves on these PTPs that they were now potentially under the radar, or I guess under the microscope, potentially from these other investors or the public, just wondering what in the world, who's Argyle? And so, without getting into the weeds too much, they ended up selling a lot of their PTP stakes. And um,
That's
that
too
helps
bad
us a
because
lot.
then they had to pay a lot of money in taxes, didn't they, Spencer?
It's supposed to, yes, that's right. Yes. So now that we know, like we can see the 13F filings from the shell companies. We know which shell companies the church was using, so we can look back. We know what PTPs were held, and more importantly, we know when they sold their PTPs and for how and how much of a stake they sold. And
Okay.
because we can see how long they held them, how much they held, when they sold them, we can then estimate how much they owed in taxes that year for PTP related income. And because the church has to file 990Ts, we also know how much they actually reported in taxable income. So we can compare those two things. So I don't know if we could go to page 19.
We can go to any page you want.
All right. You've got it all ready to go. So the next one, yeah. So here's an example. These, if you just look at the 13F filings, the ones in bold are the sort of the ones that were sold where a lot of the stake was sold. A lot of PTP units were sold, and or where they had held on to that PTP for a long time. So in other words, anywhere where you see it's bolded, that should have triggered a lot of taxable income.
Can I say a couple things about this,
Yeah.
Spencer? These are basic things. So this is listed by years from 2003 up to 2021. And then underneath the years are listed the PC, not the PCP, sorry. What is it called? These partnerships?
PTP.
PTP,
Publicly traded partnerships. Yeah.
not PCP. That's a rookie error on my part. Sorry.
You're fine.
But they're listed, the ones that the church had invested in by year. And of course, for the first 3 years of reporting, you don't have anything bolded because the bolded means that there's been a sale. Is that correct?
That's right. Well, so even 2003, there was a sale, but it's not bolded because they hadn't held on to it for a very long time, or at least that we know of.
Right. And you
And
can't
that there
tell in the
wasn't
first 3 years if it's been held for a long time. So there's
that's
nothing in the
right.
first 3 years.
It's
Is
kind
that
of
right?
Yeah, it's kind of an assumption that's being made. And then also that maybe there wasn't very much sold. So we wouldn't expect to see a bunch of taxable income.
Why?
Okay. So what was? Oh, say, go ahead.
Why might a big entity like the LDS Church invest in PTPs when it could pick other just companies in the regular stock market that would give the same sort of return, I imagine, and not have to even worry about this?
Yeah. I mean, I think it's speculation, but
Speculate.
okay. We talked a little bit about this as a team, but one of the things that was brought up was this idea that like the church culture at Ensign Peak could also be this way. They're reporting to the first presidency every year, at least, and they have to show and justify their existence. And so any extra advantage that they can get to earn a higher return is something that then they can hand the prophet and say, look how good we're doing. Well, good, well done, thou good and faithful servant, is what they're hoping to hear. And so these PTPs is an avenue, a risky avenue, but it's one where you're just getting extra return. And so that extra alpha that you would get, we also saw like how they actively manage their portfolio and they hug this S&P 500 index pretty well
Right.
with their common shares. But they actually don't perform, at least in the last few years, they haven't performed better than just if they just invested in the S&P 500. Like if they just put it all in an index, then they would actually have performed a little bit better.
Only takes one guy to do that.
Yeah, right. And so there's some of that I think going on. And when I was a missionary, there were probably times where I where I said that I taught 10 lessons on a day or something, and I really taught 2, or, you embellish a little bit, right? So like you're a ward clerk and maybe you say, yeah, there were over 100 people in sacrament. And then you hand that to the bishop, and then the stake president says, yeah, I think that we could probably say there were 110. And then the area president says, yeah, I think there were probably 120. And before you know it, the top leadership is just given a completely different. I'm not, I'm not saying that they lied to the first presidency. I'm saying that like they have incentives to whoever they're reporting to pat them on the back.
To
Like
make
that's
things
sort
look
of the
as
structure
good
of
as
the church.
possible.
Yeah, right. The incentive is there.
So on this page, you've got every year after the first 3 years, after starting 2006, right? There is a significant UBTI triggered by selling very large and or long held positions for Enbridge Energy Partners in 2006. And then there's Enterprise Products Partners and Oneok Partners. Do you know how to pronounce that, Spencer?
No.
Okay, Oneok.
Good job. It's just the way you said it, probably.
Thank you. And then 2008, there's nothing significant. Then 2009, you got one. Then 2010, you got a slew, and so on throughout the years while this is all going on. Surely they must have paid taxes on some of this, Spencer.
Yeah. So this is where we kind of get to the main finding, right? So 2010 to 2012, especially, right? There's a lot there. So if we go to page 14, based on what we know about how much they had in PTPs and for how long, we observe and sort of estimate based on these bubbles. So you can see these blue bubbles that when they sold, and based on how much they sold, we estimate for each year approximately how much the church should have reported in their 990Ts relating to their PTP investments. So the bigger the size, the longer they held them before they sold them, the bigger the blue bubble, the more that they had to report to the IRS. And we're very much simplifying the process here, but this is sort of like the visual. But I wanted people to see that, because then we're going to compare how big this blue bubble is of taxable income to how much actually showed up in the 990T. And so the first thing we'll do is maybe let's look at 2018 and beyond. So 2018 to 2020.
This is after the whistleblower. So this is after the whistleblower started getting in compliance?
Yes.
Okay.
So when you look at 2018 through 2021, you compare how much each sale of PTPs should have triggered in taxable income based on our estimate. You see that what the church actually reported in taxable income pretty much tracks with that, right? I mean, it's not exact. Those bubbles look very similar.
Yeah. Are they not exactly the same? Is there a little bit of difference in the bubbles?
There absolutely is, because we don't have the K1s. We don't have the exact numbers, so we have to make an estimate.
Okay.
But this shows that our estimate is pretty darn good, I think. Based on what we think they should have reported and what they actually did between 2018 and 2021, looks like our estimate is pretty much right on. So it looks like they're, if you look at the bottom versus the top, how much they reported in the top seems to be right around the same amount that we would have expected them to report.
And the symbol between those two boxes, it looks like wavy equal sign. That means approximately equal to. Is that what that means?
That's right. Yes.
So the church is paying since 2018 to 2021. They are paying the taxes that are legally owed on their PTPs, at least according to your best estimates.
Yes. At least, yeah, within some margin of error. Yeah.
So the $64 question is, was the church paying the taxes on their PTPs that they're legally required to pay before the whistleblower blew the whistle and when they thought no one was looking? And no one was looking at the time. It's only now that you're seeing this.
Yeah. Do you want to do a drum roll or something?
I think that is the drum roll.
This is the best part of the whole report.
Here you go.
All right. There it is.
Those don't look the same now.
Every time I look at that slide, it's just so obvious, right? Like that's the thing that's interesting about this report is that we engage, there's a lot of background and like a lot of like just, crossing our T's and dotting our I's. But in the end, it really is this. It's page 16. It's just so obvious. So if you look at the bottom graph, there's a lot of blue bubbles there in terms of like how much they should have reported in taxable income.
Mm-hmm.
And instead, at the top, this is how much they actually reported in their 990Ts in terms of taxable income from PTPs.
So what are
The
these red
church
dots?
nearly always reported either zero
Yes.
in taxable income or a loss in taxable income from PTPs.
Is that the red dots?
Yeah, that's what the red dots are. Zero. There you go.
And very few blue
Yeah.
dots. The blue dots they have are much fewer and much smaller than what should have been expected. Is that correct?
That's right. And there are other parts of the taxes that they would have to pay each year potentially from this. And so I'm avoiding talking about that because it's not really where we have our findings. But there's going to be some taxes that are owed or paid each year, and some of that could be loss. But essentially what we're finding is they basically ignored this element of their taxable income.
You're saying that in years where they almost certainly had millions of dollars in profit from these, that they reported much of it as losses.
Accumulated profits, yes, that they owed. Hundreds of millions.
Wow.
And they were reporting it as losses?
They were reporting it that year as losses. Yeah. So the most egregious was the period between 2010 and 2012. Between 2010 and 2012, more than 100 million.
I'm sorry, Spencer, this is for the decade 2007 to 2017 or the 11 years?
Yes. I believe that is what that, yes.
It says
that's
so here on the right in the middle.
Yes. Yeah.
Okay. So next slide.
Yeah. Well, I just wanted to mention, like, just to kind of clarify that if you go back, some of these are all from different years, right? But if you look at 2010 to 2012 specifically, to your point, Bill, more than 100 million of taxable income should have been reported in those 3 years, more than 100 million. And instead, I think Enzyme Peak reported a combined loss of 2.4 million. So it's not really like possible for us to have just miscalculated, right? It's not something where it's like, well, your calculation, you added it up and it got to 100. They added it up and they got to 98.
Right.
That's not what's going on here, right? That's kind of what I want to point out is like, it's essentially just ignoring this element of the taxation structure. So
I just want to say this, which is when you report a loss where you had a gain, not only are you being deceptive, of course, if this is all true, you're being deceptive about this money that you made that you're sort of just hiding under the rug and not telling anyone. But by reporting a negative, the other parts of your company where you did have a positive and there's an offset, you actually sheltered yourself from taxes on that as well. Does that make sense? If I make $10 in profit here and 40 million in there, and now I'm negative 12 million because I have these losses over here, I avoided not only the taxes on the 40 million I had hidden, I also in part was offsetting other expenses. In other words, you essentially sheltered yourself when you would have been liable when not just the things you're hiding, but also the other places you made a profit that weren't as much as the loss would have come into play in the math equation as well.
Yeah, I hear what you're saying. We can't say whether that was happening in any sense because the loss itself could have been from some of these other rules that existed that then get carried forward to future periods. The loss amounts, these small losses that were reported could have been totally legitimate, those pieces of their tax structure.
Yes, they could have been legitimate.
They later offset future gains.
Yes.
So say in like 2019, 2020, with those perfectly legitimate within the law losses that they're recognizing here. That's the idea. Yeah. Yeah. So I wouldn't worry too much about the fact that they're reported as losses. It's just that like the gap between them saying, no, it's not that we just misestimated. It was just like, we aren't even going to acknowledge that we owe taxes here.
Is the red dots the size of the circle is on the blue is correlates to the size of the gain on the selling? I assume the size of the red dots is the same, or is the red dots not sized differently?
I'm not sure, only because it might be, but they were very small losses.
That's my point, is that whatever they made, they offset it with a loss that was just enough to make it a red dot, when in reality, these should be giant blue bubbles.
Oh, I don't know that they like purposely made it a loss. I don't think that they were like, you know what, let's try and calculate it so that it's a loss more than any other tax structure would be. So that it's just under zero. Yeah, I don't know, because that's a bigger
question anyway, so no,
that's fine. Well, and so I want to clarify too that like my expertise is not in tax. So we had people that were much more well-versed than I am in tax. I can't explain to you like very easily why that would be the case, that they might want to do that for other reasons that are perfectly legitimate, or whether they even had control over that. But just to kind of clarify, like that there are various strategies in which you wouldn't necessarily want to be just under zero, or where, because it's just a temporary difference, like doesn't really matter whether you report the gain or the loss. It just depends on kind of the perspective in the situation.
So whoever's doing this, and it's a group of people, and obviously they're way up the totem pole and being authorized to do this, I would expect, by the leadership of the church. We'll get into that in a second. But what I'm trying to say is that wouldn't they think at some point that we're kind of out on a limb here and we're subject to being exposed, because all somebody has to do is be as smart as the Widow's Mite report. Look at what we are invested in as far as the PTP goes. Look at what we're reporting to the IRS, and then compare it with what those actual PTPs were doing, how they were performing at the same time.
Yeah. I think that in a normal world, maybe that would be something they were worried about. But when you have shell companies that are reporting the PTPs, there was no way to connect the dots between these two. As long as people didn't know who owned the PTPs and the fact that they were being sold, people could still see the 990T, but they could never cross-reference it to the 13Fs at the time.
We wouldn't know about this at all, except for the exposure of the shell companies and their names. Is that it?
That's right.
Kobe's asking, is it possible that these were gifted shares? People can gift their stock portfolio. And I'll just say, because you showed that it's really only gigantic companies that own these shares, it's a very small insider kind of group of big people who could even do this or choose to do this. It almost certainly is not a bunch of private people outside of business. I mean, again, it could be very wealthy people who have some shares, but an individual almost certainly doesn't have this much money in PTPs.
It's possible that they were gifted some shares, like you can gift in kind donations. Yep. It wouldn't make it so that that they weren't taxable. They still would have been taxable when they sold them. But if you're asking, like, that they were gifted the shares and that's why they held on to them, like, it's just like, well, somebody gave us these. It's not a strategy to buy them. Somebody just handed them to us. Very, very unlikely. Yeah. Just because they're so rare. It's just not a thing where, like, it's extremely rare for a nonprofit organization to be holding these, for sure.
Well, certainly if you have to pay taxes on them. What's the point of being a nonprofit if you're going to invest in things you got to pay taxes on?
Yeah, and I guess you could say that, like, these corporations are paying taxes just before they hand you the return. And so it's, 6 of one, half a dozen of another. But
Right.
If you have to go through the effort of paying the taxes, that's a significant undertaking. So so it would make more sense in terms of just the tax side of things to just invest in regular corporate securities. So does that make sense?
It does.
Yeah.
Now, have you said everything you want to say about that? Because once you have, we want to turn to the fact that the widow's mite looked at several, and I think it's 5, potential explanations, innocent explanations for why it is that the data could make it look like the church was defrauding the federal government by not reporting their taxable income.
Yeah, let's go ahead and talk about that. So,
because that's
and
very important to see. It's really the process of elimination. Well, here's a legitimate reason. Let's see how that fits the evidence and so on.
yeah, and we tried really, really hard here, RFM Bill. Like I lots of just text messages back and forth in the middle of the night.
Mhm.
Just like, well, what if they did it this way? Well,
Mhm.
what if this was how it was done? And just over and over again. We tried really, really hard to come up with any ways to explain how this could have happened legally,
Yeah.
where they just didn't report anywhere near what we estimated they should have. And we can't come up with anything. So if the church is innocent here, just clear it up. Just clear up the record, and we are happy to acknowledge that we were wrong here. But even with engaging in tax experts, we're not really seeing any possible way where this could be, where it's just the data just don't point to that. They don't suggest that that's possible. So for example, we included a much more complex model with different assumptions and incorporating separate estimates for different deductions that can be made to get to that taxable income number, with the help of a tax expert on the team. And we got to similar answers where it was still big blue bubbles versus small red dots, like just over and over again, where they just were not paying. You had these huge PTPs that had been held for a long time being sold. And at the same time, the church on its tax forms was reporting basically no sales of PTP investments at the same time.
That's
So,
astonishing.
yeah, just kind of blatant disregard. I mean, it's blatant. So yes, to your point though, this slide here, we thought about 5 different possible alternatives. I'm going to skip the first one because that's the one that I think we can't rule out, really. We can't even try and rule out, really.
Yes, we'll get to it, but it seems really unlikely that that's what happened, but you can't
Yeah.
rule it out. So number 2, Ensign Peak made an honest mistake with taxes on publicly traded partnerships. We talked about that a little bit before. Can you talk about it here again?
Yeah, it's like maybe they just didn't know what they were supposed to do here. We don't find this to be likely because for 2 reasons. Number 1, if they didn't know what they were doing, they had a global tax expert in Deloitte that definitely could have helped them know how to do this the right way. They had hired an accounting firm to do this, an expert accounting firm. Just no chance that they couldn't have said, "Hey, can you help us out here? We don't know how to do this." But apart from that, when you look at the way that they handled the PTPs when they were making these new shell companies over time, they were done in a way, and this goes back to Bill's point before, that was very different than the way that they handled their regular common stock investments. And we go into a lot of detail on this in the report, so I don't want to get too much into it, but they were done in a way that would essentially help them reset their taxable income in new businesses or the new shells, so that if they ever did have to pay in the future, let's say that the IRS did say like, "Oh, you know what? You were supposed to pay taxes on that," that they could go back not as far, so that
So
they
it wouldn't
wouldn't
be as
have to
much
pay as much
taxes
tax. So they
because
wouldn't have
not
to
as
pay
much income.
because they sold maybe in one shell, eventually rebought in another shell. They acted as though that was their first purchase. And so we haven't had this since 2006. We've had this since 2012, that kind of idea.
So let me
And
see
so
if I
that
understand
kind
it.
of calculated approach is not
Yes.
something that's done
Right.
on accident.
Well, especially not. Let's see if I understand this correctly, because here you've got a situation. This is what's making it look like it's not an accident. This isn't an honest mistake, okay? They're treating the PTPs different than all the other stocks. The stocks.
That's right. Yeah.
So here's what they do, okay? What it appears they do, according to the data, is they got these 13 dummy shell companies. So one shell company, and it was Argyle at first that had most of these, if not all of the PTPs in it, okay? That was the first company. Then it starts getting split into other companies. So when it disappears from one shell company, the PTP, the same PTP, and shows up in another, they sell it. Remember, you don't sell it until you have to, because then you trigger tax obligation. You got to pay taxes as soon as you sell it. That's why that's important for this conversation. So they sell it from one dummy company, and then they buy the same PTP in another shell company.
That's right.
Which makes no sense, because you're having to pay more in taxes, but what you're doing is you're shifting it over to another entity.
Yes.
And once send it over to another entity, it appears, now I'll let you say how strong the evidence is on this, that the idea was or may have been that the church can say, okay, well, look, here we've got this entity. The church isn't talking. It's the entities who are talking for themselves. There is no church as far as the entities are concerned to the federal government. But instead of having this, Argyle buys it in 2002. Then they sell it in 2006. This is an example, just a hypothetical. And another shell company buys it. So now if it gets busted open and the feds get wise and they come down to this shell company, the second shell company can say, well, we've only had it for this limited amount of years when we bought it.
That's
and
exactly
not have
right.
to trace it back to the original, right?
That's right. And
of course, if they had paid taxes on the original, it would have all been fine.
That's right. And it's important. It's very important to note that when they were filing their 13Fs, they could have just shifted the names that they were under into another company. Like they could just transferred it instead of selling it and then buying it.
Yeah.
But they didn't. And so it's important to note that they actually did sell them out onto the market, and then they repurchased them sometimes 3 quarters later. So this is not like we're not quibbling here about whether the church just basically sold it and bought it the next day, just under different shell companies. Because really the shell companies don't exist, right? They're not that they're disregarded entities. So you could just kind of think of them as like they don't really exist. So the church sells it, the church buys it.
Right.
And so the fact that they sold them, they literally did sell them to the market. Then they literally did buy them later, but with enough time in between that you can't say that it was just basically a transfer of assets. The fact that there was, 3 quarters or a whole year between the selling and the buying, it means that they definitely owe taxes. They can't make that argument that they didn't because of that. Does that make sense? I just wanted to make sure that to clarify.
It also makes it harder to track it too, as this whole game being played of selling it and then buying it back. In other words, you really want to keep it, but you want these moments that separate you from it so that you can minimize if you are ever caught. Now you have to go find the other company that sold them and it's just going to be hard to track all that down. So it's sort of a dual purpose.
That's right.
Yeah.
Well, in 2012,
track it down unless you knew that they were shell companies. As I understand your point, Spencer, I think what I understood you say is that they're selling it and then they're buying the same stuff by a different shell company. Church is buying the same PTP stock. Is it correct to call it a stock?
Well, they're called units, but that's
units,
okay. You can call them stock, whatever.
Okay, PTP units. Then they're buying the same PTP units in a different shell company like 3 quarters later, right?
Sure.
My understanding from what you said was if they had just transferred it from one dummy company to another, then there wouldn't have been any sale. There wouldn't have been any tax obligation that was triggered by a simple transfer. But if they had just sold it one day and then bought it the next day, then at least they could make the argument that it's the equivalent of a transfer. And so it shouldn't be a triggering event for taxes.
Yeah, they couldn't.
3 quarters
it would have
later
been
too long.
It would have been hard for them to transfer it though, because of the 13F, right? Because these shell companies were supposed to act like they were completely different companies for the 13F. So you can see that they're between a rock and a hard place with these two different rules. And so, here's another example of what they were doing. So in 2012, they started more shell companies. At first, it was just Argyle. First it was Whitney,
Right.
but then it was Argyle. So there was just one shell company, and they started to create more shell companies. The reason in the SEC letter that this happened was, according to them, that the size of the portfolio became concerning to them. Well, actually, the total size of the portfolio was about the same as in 2011 as it was in 2006. So it's not that the size of the portfolio, it doesn't really make sense that that would be the reason that they would create these new shell companies. Why wouldn't they create more shell companies back in 2006 then? But the Argyle had a ton of PTPs, and they were like a lead investor, one of the top investors in a lot of these PTPs. Now that is something that could draw scrutiny.
So actually, whereas the story that we've understood it was that they had Argyle as the one at the time, right?
Yes.
It replaced Whitney, as I understand it, as a dummy corporation. You got Argyle, and then they were making so much more money that they had to hide how much money they were making by creating these other 13 Fs in different installments, but these other 13 F dummy companies. What you're saying is actually between 2006 and 2011, when they began to proliferate the 13 Fs, there wasn't a huge increase in money. They didn't have money to hide, but the answer isn't in the money they were making. The answer is in the PTPs that Argyle held, and it's up there as number 4. It's up there with the big boys, and everybody's saying, who the hell is Argyle, and why do they have so much in PTP? It's drawing attention. It's drawing attention. So we've got to spread out the PTPs among other dummy companies.
Oh, so that's where it gets weird. So at first, what they did when they created the shell companies is they sent all the common stock to the other company, to the shells. Now, why would they do that? Because they needed to separate out the common stock where they were in 13F filings, and not at the same time have the PTPs associated with it. So it's just, there's a lot of engagement in very calculated behavior here. Now, eventually they did sell it off. They had to slow it off. They had to slowly sell it off out of Argyle.
So they created the dummies, transfer all the common stock, the non-PTP stuff, and then they go through this belabored process of selling off their PTPs, or at least a lot of it, from Argyle, so that 3 quarters or so later, they could be purchased again by the newly created dummy companies.
That's right. But they couldn't do it all at once. They couldn't just, throw it all into the shell companies.
Yeah, then it'd be obvious what they were doing.
Yeah, and so if you draw scrutiny from one place, they didn't want it to be like, oh, okay, well, now I've learned that these PTPs are actually owned by the church. But then you didn't want it to be where it was like, oh, you know what? They also own all these securities. And so it was done in sort of stepwise fashion. Now, a lot of this, like the behavior, whether our interpretation of the timeline is exactly what happened, I don't think that that's as important. What's clear is that they were treated very, very meticulously.
The PTPs.
Yes.
All under the heading of this wasn't a simple mistake where they didn't know what they were doing.
Yes. They were treated in ways that would make sense to be treated that way if they were worried, number 1, about public scrutiny and about being found out who they were, and number 2, about avoiding taxes.
And these ways don't make sense if it's just an honest mistake.
Right. Exactly.
Okay. So number 3, Ensign Peak. This is a possible explanation for why it is this happened. An innocent explanation. Ensign Peak did report all applicable UBTI, but netted it against other investment losses.
Yeah. So first of all, it's not allowed to offset one investment with another PTP like that. So, but I mean, it's not like something not being legal has ever stopped them. So we had to think about that. But also, when income or losses were reported on the 990T, they listed on one line item, it says, what's your total partnership UBTI, your taxable income from PTPs? And it matched the individual UBTI for each partnership. And so if they had like some hidden netted loss from somewhere else, it wouldn't have shown up on their forms like that. Instead, they listed all of the individual PTPs, and then they listed the total, And if you add up the individuals, you get to the total. So there's just no way that it's not likely. It's very, very unlikely, unless there's just something else that's misreported, that like they were netting losses and gains together.
Yeah, there's no offset represented in these documents that show, well, you were just adding them all together and coming to the natural and accurate result.
Exactly. That's right.
What's number 4?
So number 4 is maybe Ensign Peak didn't pay the taxes itself, but the shell companies paid the taxes. So we're just not seeing it on Ensign Peak's 990T because it was on Argyle was the one that paid the taxes, right? For example.
Does Ensign Peak have any kind of filings during this time?
Ensign Peak is filing the 990Ts, but not. But Argyle is filing the 13Fs during this time.
Wow.
So the question is, maybe it's not showing up on Ensign Peak's 990T because Argyle's the one that's paying the taxes. And that would be okay. That would be consistent with this idea that they're acting as though these other entities actually own them.
Mm-hmm.
But if that was the case, then Argyle would have also had to file a 990T. And there's no 990T for Argyle. So if Argyle is also a tax exempt entity, it would have had to file a 990T and we would have seen it. Clearly, that's not the case. The only other possibility is that they acted as though Argyle was a for-profit, not a not-for-profit entity. But if Argyle was a for-profit entity, then that means they would have had to pay taxes, not just on the PTPs, but on all of their gains of all of their other securities, all of the $50 billion in their common stock that they have now. They would have had to pay capital gains taxes on those because they would have lost all of the advantage that you have from being a tax exempt entity in the first place, right? If they filed under Argyle. Yeah.
Do we know if these dummy companies were all set up as nonprofit entities too, which is a whole nother layer of deception when you put applications into the federal government to get a tax exempt EIN number to be approved by the federal government as one, and to then file reports every year as if that empty one-room office with a phone is a nonprofit doing good in the world.
I don't know. I don't think so. I think we would see that because you can find the reports in the IRS of like who has been given tax exempt status, granted tax exempt status. So no, I don't think that they were ever like officially granted exemption. There are certain cases with churches where they actually don't have to file for tax exemption; they just automatically get it. So it's kind of an odd secondary rule. That's kind of ancillary to this, but I think that probably all we know about the LLCs is that they were incorporated as LLCs and that there was a trust created, if I'm remembering right, that was the head of those LLCs. So you try to create 3 degrees of separation. So it's like you have Ensign Peak, then you have a trust, and the trust owns these 13 shells. But I don't think that they ever officially applied for tax exemption. It's a good question. I think we would see that though. So I don't think so. Yeah.
One other point here I'd like to ask, these 900 Ts that you said the Ensign Peak's been filing with the federal government, and these are the reporting forms that are supposed to report the income that they've been getting from UBTIs, correct?
Yes.
Okay, I've got that much. Did Ensign Peak actually file one of these 900T forms with the IRS every year? Are the years missing?
Well, there are years missing. We aren't exactly sure why they're missing. It could be a mistake from just the system that IRS has, right? And so, but there are years missing. And so, for example, 2016, there's no 990T for the church. 2015, 2017, there are, but not 2016.
This is where you're looking it up on the IRS database.
That's correct. Everybody could go find the 990Ts for Ensign Peak. And so we're not exactly sure what the deal is with that. So there is a process of like petitioning for 990Ts that aren't showing up. And so I personally have sent out that form to fax it out to the IRS. So hopefully we get it back and we find out they give us the 990Ts of the years that are missing, going back a little farther. So there is missing data. We don't know if it's because the church didn't file a 990T or if it's because the IRS just, with its system, it just didn't put it in or something like that. Yeah.
Right. If there's a process for requesting them, it's probably a common problem.
Yeah. Yeah. Probably.
So number 5.
The number 5 was that maybe they didn't report gains here because actually a lot of these PTPs weren't successful and they were experiencing losses. Like they actually weren't doing well. And that's actually not true. So even during the downturn, the economic downturn between 2008, 2009, 2010, they were still giving those distributions. They were giving those money out to the investors. So just not possible. Yeah.
All right. We're going to come back around the horn to number 1 as you requested.
Yeah.
But I just want to repeat for everybody who's watching, what the Widow's Mite did is they have found evidence that suggests strongly that the church has been engaged in tax avoidance by underreporting their income, specifically from these PTP companies or partnerships on which they're required to pay taxes in spite of the fact that they are a not-for-profit corporation. Having said all that, the Widow's Mite then said, okay, before we go public with this, and we've been working on this for a year, before we go public with this, with such a strong allegation, we want to make sure we've done our homework and we've covered our bases and we've looked at every possible innocent explanation for this data. And that's the 5 bullet points here that we've gone through, and you've looked at all of them, and none of them are likely.
Yeah. None of them seem likely.
Which makes it look more and more like it was illegal and intentional, the tax avoidance.
Tax evasion, yes.
Tax evasion, thank you. There's a difference.
Illegal, yes. I mean, we all engage in tax avoidance, I think, if we take deductions and things like that. That's just tax avoidance, yeah.
That's legal.
That's legal, but tax evasion is illegal. The first possible explanation, though, we can't rule this out. As an accounting researcher, this is actually a big deal for us, where you have what actually happened, and then with accounting, you have what got reported to have happened. And oftentimes there's a disconnect, right? And so it's possible in this case that the church lied to the IRS and lied to Deloitte in its tax forms. So the tax forms are wrong, but they secretly paid the taxes that they actually owed.
And they did that by backing up a big truck to the IRS building and dumping off the money in the middle of the night. I mean, isn't somebody going to look at this and saying, why are you giving us all this free money, church?
Well, it's an odd question, right? It's an odd explanation. I don't know that the IRS is going to say, they might have audit procedures where it's like, they're looking for underpayment, right?
Right.
They're not going to look for overpayment. The IRS is super, super underfunded, by the way. Like, it needs so many more resources. This is, it's not going to be able to tax or to investigate a lot of the wealthy or more complex structures that like this, that it should. So it's possible. If that's the case, though, it doesn't mean that they didn't break the law, because that would still mean that they had to, number one, lie to Deloitte, but they also had to lie to the IRS, and they had to lie to the public, which is still misfiling issues. And so that would mean that their tax filings were misstated and that they should be restated in that sense. Okay, so either way, there's not really a what?
This number one possibility that you can't disprove it, okay, but it seems as unlikely as the moon being made out of green cheese. Are there any other examples that you know of historically where that has happened, where some organization or person is engaged in tax evasion? Apparently, they haven't paid taxes on what they've declared, but instead of doing that, they lie about it, and then they take the money that they were supposed to pay if they had declared truthfully, and they funnel it to the IRS in some other category.
Yeah, no, but the the church is an odd duck, right? I mean, I also don't know very many churches that have amassed this much wealth in the stock market. So we're kind of looking at an N of one. There aren't very many other comparison observations to make, right?
Well, let me
But
ask you.
yes, I agree.
Let
Not
me
very
answer the
likely.
question this way as well. Okay, is this a wood tool? By which I mean, wouldn't this be a possible explanation for any entity that you found evidence on that looks like it's engaged in tax fraud?
That's a great point. Yeah. Yep.
Because you could always say, well, maybe they gave it in some other way that we don't know about because they hid it.
Yes, that's right.
Yeah,
Yep.
this never happened.
Well, that can be your I feel like we have to stick to the data and we have to give every benefit of the doubt we can. I think
appreciate
that
that.
you've noticed over the time that the Widows Might report hedges any
Yes.
chance that it can. That's
Yes, and that's
that's
smart.
been, yeah. So
The Widow's Mite is very, very careful with its data and the interpretation of the data, and basically tries to put the data out there. And any interpretation, they look at it from every possible point of view that they can. It's not a hit job. They're just trying to get to the root of things and find out what's going on. For example, they took an awful lot of time here to look at any possible innocent explanations for this data that would mean the church wasn't engaged in tax evasion. And they went through all 5 of them, and we looked at all 5 of them, and 2 through 5, I think Spencer said basically, yeah, that doesn't look likely at all.
yeah.
From unlikely to extremely unlikely.
Yeah.
And number 1, you're saying, well, it's possible, but we don't have the data. But I just asked you, has there ever been an example historically of this kind of thing happening to your knowledge? And I think you said no.
No, absolutely not. Not
And you
that
study this stuff, right? For a living, you're a professor.
I study financial reporting more than taxation, but again, yes, it just isn't aligned with most companies' incentives. So you just wouldn't ever see something like this, right? In
Right.
fact, there are cases where companies have paid more in taxes than maybe they could have taken deductions of. They're usually companies that are under public scrutiny. So companies like ExxonMobil, companies that that are seen to be bad actors in the social world. And so in order to, as like a sort of substitute, like, yeah, I know that we're not great for the environment, for example, but we're doing what we can. And also we paid a lot in taxes. They don't want to draw any additional scrutiny by saying, also, we're also avoiding all the taxes we can. Right. So they're trying to gain points from the society that way.
So why is it with ExxonMobil, you know what it is they're doing, whereas with the church, you don't know whether they're doing that?
Yeah, that's interesting, right? Because you actually have to know how much they paid in taxes. Technically, we do know how much they claim to have paid in taxes. That's the difference, is that they may not have. So,
Okay.
yeah.
So is that it for the 5 different examples here? Possible innocent explanations?
That's it. That's
All right.
it.
Now I added another slide here because I thought this was the slide out of all 82 that just bowled me over. I think it's number, I can't even see it down there. But
58.
hey, Bill, are you working the live chat and everything? Because I thought I'd give you a chance to read this one.
I'd
See how it
love to
impacts
read
you.
this. So the top says EPA appears to have misled the IRS to enhance returns. A primary benefit inherent in PTP securities is tax deferral. As such, it is highly unusual for a prominent investor to sell 75% of its PTP portfolio only to repurchase most of the value of those holdings, because I'll just say it here, you would pay taxes every time you do it. It makes no sense unless when you get caught, you're trying to keep one dummy company distant from the other dummy company.
And unless you're not paying taxes
or over time.
Yes.
Yeah.
Yeah, there's a huge risk and there's a huge protection, and the protection is great as long as you don't get caught. But if you get caught, the risk is huge. So 75% of its PTP portfolio only to repurchase most of the value of those holdings a few quarters later in a new shell LLC, as EPA, Ensign Peak, did in 2010 to 2012. When combined with the fact that essentially 0 UBTI was reported by EPA in connection with those PTP dispositions, the behavior is highly consistent with tax evasion. At least $100 million of UBTI should have been reported by Ensign Peak between 2010 and 2012. Small losses were reported for that 3-year period.
Yeah, there's just no way around it. That was a good slide to add. Good job, RFM. And you know what? You also get credit for actually reading the report. That's great.
Well, I will admit I read the whole thing, but I did kind of pass on Exhibit 4 because my eyes started rolling up in the back of my head in the middle of your methodology.
That's like when people ask me like what I do for a living, like, oh, accounting research, what's that like? And they ask the question, but I don't think they actually want the answer because within a few seconds their eyes glaze over. And yeah, that's
you seem
Exhibit
relatively
4.
well adjusted for an accountant.
Oh, thanks. Try.
Is there anything else that you want to say? I think we're at the end of the slides. Yeah, now that's going into the slides for tonight's news show. What do you think the bottom line is on all this? And let me go back to something, Bill, I think you'd asked this before the show started to Spencer. What do you think the odds are that the IRS is going to move on this? Because this is all new information to the IRS as well, isn't it? Or at least a lot of it is, as well as to our audience.
It would be new information as far as we know to the IRS. I don't think it's likely that the IRS will act on it, actually. So there are lots of rules around when it's allowed. IRS is even allowed to investigate these types of things. Number one is they have to have basically reasonable suspicion, which is required. That requires sort of basically somebody to submit a report to saying, here it is, you've got it. Now that's happened with things like whistleblowers. This report could potentially lead to that. But then there's a statute of limitation concern here. It's not clear that it seems as though at least this issue, a lot of it is past the statute of limitations, just sort of unfair in my opinion, because most of the period in which this was happening, it was under the cover of these LLCs, these shells, where the IRS never would have had reasonable suspicion to suspect anything because they didn't have all the data in front of them. So it's a little odd to me. That's just not really fair.
I think an argument should be made that tolls the statute of limitations. I don't think as a defendant, I don't know about IRS and tax.
I don't know either. Okay.
As a defendant, you can't, what is it you can't do? You can't, let's just say you can't hide out. You can't go someplace and hide out and think that's going to toll the statute of limitations. You don't get to act badly and take advantage. You don't get to act badly in such a way that delays the finding out of your crime and then take advantage of the fact that the crime wasn't found out in time to file before the statute of limitations ran.
Yeah.
You can't murder somebody, hide the body, and then the body's found 10 years later, and now you're off the hook because so much time's gone by.
It would be, that's a great analogy, except for, of course, murder is a capital offense and it doesn't have a statute of limitations. But yes, if it were theft,
sexual
robbing
abuse,
a bank, maybe.
There are a lot of times where those things shouldn't have a statute of limitations. They do.
Yeah, you sexually abuse somebody and you take the victim and hide them in your basement until after the statute of limitations. Then you let them out and you only go for the kidnapping charge, not for the sexual abuse because the time's expired.
Yeah.
You've thought way too much about this, Bill. Just kidding.
Sorry, just a second analogy. Somebody does ask though.
It's a personal hobby of Bill's.
Yes.
Yeah. Kidnapping. There's some person asked this. So David Glenn says, CPA, Masters in Tax, recovering Mormon, former IRS auditor here. I read your document and think you are really reaching. PTP and K1s are complex and it's impossible to know whether they underreported income without the K1s and their books. I'm not saying all is well, just that you lack sufficient information to make the claims that you're making. And I just want to give you a chance to respond to that so it doesn't just sit there without a response.
No, that's great. I'm glad that you're bringing this up. So part of, I think this is the fact that like we're doing this over, consolidated podcast episode as opposed to like the actual report. So you said that you read the document. I'd like to know a little bit more. Feel free to send an email out to the Widow's Mite, first of all, in more detail on this. A couple of things to note. We did make adjustments for what we would expect to see in terms of, deductions that would then lead to differences in the K1 and the UBTI that would be reported. So I don't know if you saw that in Appendix 4. So there's a more complex model that we've done. We've done a top-down model and a bottom-up model in terms of estimating that. The second thing that I would say is that, yes, you're right. We can't see the K1s, which means we can't precisely estimate this.
Can you repeat what the K1s
However,
are?
the K1s are what the investors in a PTP get at at a certain period to say that here was the income that the PTP earned. And then you use that to calculate how much you have to pay in taxes, how much you have to report in UBTI. So you're right, we don't have the K1s, but the only way in which they wouldn't have any UBTI in these scenarios where you have a PTP that's been held for a long time with a lot of income is if somehow they exactly evened out, right? The UBTI amount that is your basis and I'm mixing up terms.
The income that you got from the investment is equal exactly to the amount of loss over time.
Yes, that's right.
So
okay, so I can't remember what your name is, who gave that comment before. But I want to point out, David, that we looked at individual PTPs, okay? Systematically, every single year, they were doing this same behavior, right? So what are the chances that every single time that they sold, that the same thing was happening where they weren't able to recognize any UBTI every single time that they sold? There might be some like really weird circumstance where the cost basis would be the same as whatever it was that they sold it for. It just isn't. It's just beyond the chances of coincidence. And I'm probably betraying the fact that like I'm not a tax expert here in terms of the terminology that I'm using. But we made adjustments for things like bonus depreciation. We made adjustments for things like changes in the the statutory allowance for bonus depreciation across time. We made adjustments for debt-based capital gains taxes. We made a lot of adjustments. I just don't see like how and it goes back to the fact that like it's every single PTP basically, and the same general principle will hold no matter what the circumstances are. That if you have a really large PTP, you hold on to it for a really long time, you're going to have UBTI. They didn't report any. So how do you explain that? Under what circumstances would that happen for every single PTP they had, that they had millions in, and that they held for years and years, decades, more than a decade in some cases? So
I've got a different way to frame that, which is, the SEC 13F dummy company filings. You've got leaders being dishonest over and over again in so many different moments. Electroshock hoax, the plane death spiral, Elder Holland, liar, liar, pants on fire. You go on and on. At what point do you stop giving the benefit of the doubt to the church? It has demonstrated that both it as a system and its leaders are willing to be dishonest all over the place. So let's start with, again, we'll say allegedly, but let's start with, it looks pretty clear that something here is off and it looks like tax evasion. LDS Church could come forward at any moment and could straighten that story out and demonstrate such. But my impression will be you will hear silence on the matter. The matter is still closed.
And the only other thing that I would add that I was just thinking of, because you kind of put me on the spot here, but I'm trying to kind of think of a few things that we've like started to aggregate together through 82 pages. The only other thing that I would add is to consider this. 2018 to 2021, we used the same simple model that you were talking about. That's just, we simplified it too much. And we were like really, really close to what they said was was UBTI. So it would just be so it's just beyond the realm of possibility. It's sort of in the same realm. You said you're a former Mormon, but like it's within the same realm of possibility that the Book of Mormon is like a historical document. That's where it is for me, which is, well, it's approaching epsilon. It's pretty dang small chance. So
thank you, David, for asking that question. I appreciate that, because we want to be able to answer questions, especially, I know a lot of things that Spencer was saying in response to the question I didn't understand, but I figured that David did, and anybody else out there with the training might have understood it as well.
And if you want to, please send an email with a more detailed concern here. We definitely want to get this right. So like, if you think we missed something, let us know. Yeah.
Where should they send that, Spencer, David?
You can send it to, there's an email at the bottom of the Widow's Mite page. I think it's thewidowsmite.org at gmail.com or something like that. But make sure, just go to the website and it has a contact. Yeah.
Because the Widow's Mite does regularly take suggestions, insights, and always considers them. And if there's merit to them, then they will modify.
Sure. Yeah. Yeah, absolutely. Like whatever the facts are and whatever seems reasonable, we'll include it for sure. Yeah.
All right, Professor Anderson, we're going to close now. If you don't have anything else more to say, we got to wrap up here, because we got at the top of the hour a newscast in 24 minutes that Bill and I are going to be a part of. This is going to be a big story on it, by the way. You're not going to be there, so hopefully I can remember everything that you've told us.
Great. Yeah. Thanks.
Thanks again for joining us for this special episode. This is incredible work that the Widow's Mite has been doing. We want to thank you for the work you've done there and for showing up here to explain it to our audience. Okay, everybody, this has been a special episode of Mormonism Live, and we're still going to have our regular episode on Wednesday, which we're working furiously on. It should have to do with the Dead Sea Scrolls and Mormonism. But stay tuned for another 24, 23 minutes till the top of the hour, 6 o'clock p.m. Mountain Time, for the Mormon newscast, when Rebecca Biblioteca, that's her name, Rebecca Biblioteca, will be joining us as well. Spencer, thanks again so much. Have a great week, okay?
Yep, you too.
See ya. Talk to you later. Bye-bye, everybody.